now starting. All attendees are in listen-only mode.
Hello, good evening to everyone. Thank you for being there. We are going to start with the webinar just in 1 minute. First, I need someone can confirm me if you can see the screen, if you can hear me okay. The screen that you should be able to see is the one with the financial forecast in the background. Hello, Rushav. Thank you. Okay, perfect. All okay? The screen also? Okay, you can see screen Jacobs. Thank you. Okay, everything looks working, okay? Perfect, thank you, Billy, saying that everything is okay. Good. Okay, you already found the chat box. For those that you don't, you have a chat box where you can send questions. We can interact. So please, all the doubts that you have, all the questions that you have, instrument that you want to see, everything, just you can drop it there. I will read it at the moment, and we will. I will be answering the questions all the time. Yeah, that's the idea. Trying to be as interactive as we can. Okay, as much as we can. Okay, perfect. So we have that. I will activate the video as always. Okay, I am in Europe at this moment. I'm in Amsterdam. I don't know where are you from. If you want to share, where are you from? Europe, in America, Asia. The screen I see is a personal computer with a boat. Okay, that is not what we should be seeing. Thank you, Isabel. Okay, so but you see, okay, let me just switch what we are sharing. Okay, this is not, so we should be seeing, yeah, because you're seeing all the desktop is a monitor 3. Okay, now you should be seeing the financial forecast in the background, okay? Oh, we have people from India, Rushva. I don't know if I pronounced it okay. Sorry if I didn't pronounce it okay. Thank you. Welcome, Pakistan. Is Ahmed. India. Okay, nice. Toronto, India, MB from Toronto is Billy. UK, Martin Fields. Perfect. Thank you. Welcome to everyone. We are spread around the world. That's quite nice because we have different point of views, and that was always make the webinar more rich, and that's something that I really like. Okay, let's go to start. So best, okay, Rushav, sorry. Rushav is asking for the best book for intraday trading. Okay, I will be answering that later. You have many books, but for intraday trading, it's more difficult to try to answer for me because I'm not focusing on intraday trading. Yeah, but I can give you some good books for trading, of course. Yeah, I can mention some books at the end of the webinar, so be prepared with your pen to take notes because I will share with you some good titles. Okay, we have people from Ghana. Perfect. Hassan Hanna is asking for Twitter. Yeah, the Twitter is at the Financial 4. Yeah, I will just write it later so you can see the Twitter, but you have the link if I'm okay. You have the link to the Twitter website here at the home bottom of our homepage. Okay, so you will find the Twitter there. We used to tweet every day. Yeah, so you will have some updates and graphics and interesting stuff there. Okay, so let's go to start. We have only until 8. We will be quite tight with the time today, so I apologize for that, but this is another webinar coming just after this. So I will try to get this as dynamic as I can, answer the question and everything that doesn't fit in this webinar. I can answer your questions. You can send me the questions through email. Okay. Pepe, I will share the email now with you. The recording will be tomorrow placed in our blog. Yes, in our website and blog, you will have tomorrow the recording for this webinar. I will share with you now the email so you can send me questions, request the PDF of the webinar that we will see today. You can request that so you have all the graphics and the studies. To access to all the graphics that we will analyze today, you can access them through this tab, the free forecast. Okay, big part of the package that we will see today is included in the free forecast. Okay, you have there a total of 20 graphics that you can check every day, and it's updated in a weekly basis. Okay, so you have access there. So let's go to start. Yeah, I will share my video so you can put a face to the voice coming there. Okay, perfect. Yeah, you have the video now. Okay, let's go to start. You can see, can you see the PowerPoint? Okay, we have the first question coming from Maria from UK. Why the US market is still not affected by COVID crisis? Okay, I think they are quite affected by this. We will see that today because we will center on that. Okay, so I will maximize this. The PowerPoint. Okay, perfect. I have the question here. Okay, let's go to start. What is the idea of today? Today we will go as always. I don't know if this is your first time. I always follow the same dynamic. So we go to a quick brief intro just to introduce to yourself the financial forecast and myself. Then we will move to the economic calendar. Okay, what are the key elements in the economic calendar for this month? And based on those key elements, we will analyze what is happening and what we can expect. So that will answer your question, Maria, if this COVID crisis is affecting or not the US market. So we will see it there because we will focus mainly on that. What's happening? We are following the evolution of this COVID crisis since March. So this is the third month that we are following the same indicators to see the evolution of this, okay, and how this can affect really not only the US economy and yes, the global economy, okay? Then we will move to instrument analysis. Yeah, here you can ask for the instrument you want, okay? I always used to work with these 5, the pound, the euro, Bitcoin, S&P, and gold. But for example, if you're interested about what's happening with the crude oil, so we can just jump to the crude oil or any kind of instrument that you need to know, okay? So feel free to comment in the chat box and request the instrument you want we analyze today. And then at the end, we see what is the performance of our artificial intelligence. It's working since December. In December, we launched it to the market and it's live in there. So we will analyze from December till today what was the evolution, and we have a new update for this artificial intelligence. What are the improvements that this update will bring to the Bumblebee? Okay, it's a very nice question from Aryaman. Sorry if I don't pronounce the names okay. It's asking, will cryptocurrency be the future? Okay, it's a very good question. I don't know if it will be the future, but yes, a big part of the future. Why? Because everything is moving more to the field of artificial intelligence. Okay, and cryptocurrencies in the end not only as currency, as way to exchange value or to store value, yes, to exchange information and data. Cryptocurrency will be a big part on this because it's not only we don't need to think only about the Bitcoin and accounting books and how all these ledgers move from one cryptocurrency to the other. We're talking about information also, and that will be key for all the new development that are coming in artificial intelligence and everything related. Especially now with the COVID, we see how important it is to move the information as fast as we can, okay? And a big amount of information. And the technology that will allow this kind of movement of information will be the cryptocurrencies. Yeah, so yeah, it's a big part of the future, for sure, at least from my point of view. They have another question from Shah. Hello, my question is how much time this webinar is going on? Okay, we started with these webinars in, if I'm okay, February, March, I think February. So it's the fourth webinar and we make one webinar per month. Okay, at the beginning of the month, we will always meet and we analyze all the markets. Okay, we have two questions regarding that from Shaz and from Sida. I can see the question asked. What was the question, Sida? Can please retype the question and I will answer your question, okay? So let's start with the introduction. Okay, what is the financial forecast? Making a long story short, the financial forecast specializes in the development of artificial intelligence, in tools for investors, and also in education. Okay. I have some issues with the connection. If I break down, just please let me know. Okay, so I can go back and reply what I was saying. So we're talking about artificial intelligence tools that help investors, savers to increase the wealth from one side, and from the other, education. All those that want to learn how to invest in market, how to understand the macroeconomic indicators, how to make a financial plan. Yeah, all that is something that we will cover, okay, in these educational packages. And we have a question from Read One. How much money you make analysis? I don't understand really. Okay, Sida is saying that the voice is not coming properly. I will increase the volume. Okay. Please let me know if continue breaking up. Yeah, so I can try to fix it. The question is how much money you make analysis. I don't understand really. The question is you want to know how much money we can make with the what we are doing, yeah, or how much costs an analyzing. Yeah, so if you can rewrite the questions. We have another question from Tommy. Tommy, will be the PowerPoint available for download? Yeah, not for download, but yes, you need to request it through email, so you will have access to the PowerPoint. So I will move to the last slide, many graphics. We will see today, and it's at info@forecast.com. Yeah, there you can send the request for the PDF, okay, for today. Or any question that you have, you can just send the question there, info@thefinancialforecast.com. Okay. Oh, no worries, everyone. I think your question is how much money we can make with our tools, with our system. I will answer that question further. Okay. During the webinar today, you will have that answer. Yeah, because it's part when we see all the development, how was the performance of Bumblebee. So today, Hassan, what we are going to learn today. Okay, so let's go again. So we will focus especially in all the things what is happening regarding the corona crisis, the COVID crisis, how the key KPIs, key macroeconomic indicators are evolving since February, March, and what's happening, how to read that, and then we will deep dive into specific instruments that you want to know. Okay. Okay, so what is the core, the soul of the financial forecast, how we develop all our tools? We believe in what you can see on the right side. 5 points. Financial markets are the manifestation of economic activity. Okay, so if we want to see how the economy of one country is, so we go all the time to the stock market, to financial market, to see how the economy is evolving, how strong is the economy, if struggling north. Okay, so we go always to, for example, the Dow Jones. We check that to see how the economy in the US is. Then everything that is economic activity arises from social interaction. Yes, so we need to interact. People need to interact. That social interaction create a social mood, a shared mental state, yeah, an emotion. Okay, and that's quite important because that emotion is shared by the mass of investors. Yeah, that's something really important to understand why. And we saw this, for example, with the Corona crisis in February, March, especially in March. The mood was so negative that everybody was with that mood. Yeah, if someone was asking about what will happen with the economy, if we will recover or not, the sentiment was really negative. But if we ask now, for example, probably that sentiment is a little different, and we are seeing a recovery in the markets, so that can bring some hope. So that's why if we ask the mood to that mass will be different. And this social mood create these emotions that fluctuates and move in what we call a fractal pattern. And that fractal is reflected in all the financial instruments, and we could decode those instruments that are the soul of all our tools. Okay, that is the financial forecast. Okay, most of you know me. So I found the financial forecast now 2 years ago. Before that, I've been with a very important company that was developing forecasts online. So I was in all the Spanish side, developing forecasts and managing all that part, webinars, trainings, all the stuff. Okay, and I hold a master's degree in financial markets and asset management. Okay, so I am basically involved in this since 10 years ago. And in the meantime, in between all that, I wrote a book. It's in Spanish now. I hope will be in English soon. That is called Las ondas de Elliot, el comportamiento fractal de los mercados financieros. If you are a Spanish speaker, it's a really good book that will solve many issues that are implicit in what is Elliott wave. That is quite complex to identify, and the subjectivity around Elliott waves make this system quite tricky. So in that book, we solve a big part of that, and we introduce the concept of fractals to analyze the financial markets. Okay, so that's me. And now we move to the economic calendar. Okay, so remember, if you have questions, drop it in the chat box. Okay, what happened and what will happen in the economic calendar this month? So we have marked something that are really key elements, key indicators. Okay, this you cannot hear. Okay, I have one message from Isaac. Okay, Isaac and Billy. Let me just relaunch the sound. Now you can hear me better. If not, please, every time that the sound just breaks, please let me know. Yeah. I'm checking the connection seems okay from my side, but just please let me know. Okay, key elements, key indicators in this economic calendar for the month. On the left side is what we already have. Okay, so we have for Great Britain, for example, the construction PMI. We had an expected of 22, but it drops to 8.2. Why I highlight this? Because construction is always really important to see how the economy is. When the economies are growing, are evolving. We have a lot of construction. At the moment that construction stops, yeah, something is not okay with that economy, and that's something that we can see now in UK. Okay, 8.2 for the PMI construction. Then we move to the interest rate decision for UK. Still the same, 0.1, anything new. So we keep in the same pace. And then last Friday we have really what everybody was waiting for, the non-farm payrolls and the unemployment rate. What happened? We knew that the unemployment rate will skyrocket this month. Okay, even the expectation was higher, 16%, but we had 14.7. Okay, it's green, but really this number is quite alarming at this moment, and we will see why. We jumped from 4.4, if I remember, okay, from last month, previous month. Yeah, we have it here, to 14.7 in 1 month. Yeah, 30 days. The non-farm payrolls increased massively from 870k to 20,500k. Many people are losing their jobs, and that's quite scary only in 1 month. So that's why we had one question before about is this impacting the US? Yeah, of course it's impacting the US, and it's impacting heavily, but we are not seeing yet all the consequences of this. It's just happening, and we'll have a comparison with what happened in 1929 during the Great Recession with the unemployment rate, and we will be able to compare and measure if this is really bad or not. Okay, 4.4 to 14.7 in 1 month. In the coming weeks, we will have the retail sales. Why this is another indicator that is important, especially now, because we can see the consumption with this, how the economy circulates, how the money circulates. At the moment that people, especially, people stop consuming, retail sales drop, and then that generates a stop in the economy. Okay, that will stop. That's why we need to keep a close eye to how the retail sales evolve next month. By now we are in minus 8.4 and the expected is minus 11.6. Okay, so we are decreasing in our consumption. Okay, we're talking about the US. Then we'll have the CPA. CPA will stay steady. That's what they expect. I cannot make the PowerPoint bigger, Isaac. I have Billy. I have this maximized now. But no worries, I will send you the PowerPoint. Yeah, just send me an email and I will send you the PowerPoint to you so you can see this in a bigger detail. Okay. So what is CPA? Inflation will stay steady for UK and for Europe. Okay, 1.5 for Europe, 0.4 for the UK. Sorry, the opposite. Europe 0.4 and UK 1.5. Then we move again to the US, and this is quite important. The GDP. Okay. Durable good orders, we will see how everything is working in the US economy. They are continue producing or not. Yes. Very important to pay attention to this. Minus 5.8 is expected. The prior was minus 0.4, but the GDP is the one that will tell us, okay, if we are starting a recession or not. Okay, so the growth, they expect a growth of 2.1 is a quarterly GDP for the US, and the prior was negative, minus 4.8. So this is very important. We need to keep a close eye to this indicator. Okay, if this indicator is negative, then we start being below the zero line. The growth will be negative, and if this stays longer time, then when we will say that we are in a recession. Everything is set or prepared to being able to enter in a recession. Let's hope not, but all the scenarios that we will analyze in the next slide will tell us that everything is like prepare to host a recession. Yeah, how big this recession can be, we don't know yet. But that's why GDP is a very important indicator to follow. And the last one, again, is a yearly CPI for Europe, and they expect 0.1 when the prior was 0.7. If you see, we see the inflation is really, really low in Europe, in UK, okay? And the month after we'll see in the US, okay? Any question regarding this? Tomorrow if CPI US dropped, the gold will drop more. So that's a nice question for George. No, doesn't need to. Okay. So I will check now what is the correlation at this moment with the gold and the S&P. Yes, if the if the correlation is high, then yeah, you can expect if stock markets drop, then gold will drop, or we have a big chance that the gold will drop. But it's not the case at this moment. The gold increased when the stock markets were decreasing. So we will have probably the opposite reaction. Why? Because when all the economy is so uncertain, the gold is a safe haven. So if you don't know really where to keep your investment, you know that gold is safe. Okay, and that will create a shift from different kind of investment products to gold. Okay, and that is what creates the gold up. Okay, increase the value when the stock markets, for example, just drop. Yeah, not always, but let's see now if we have the correlation. What is that correlation at this moment with the S&P and the gold? Okay, we will see that in the instrument analysis. Okay, this asking Arnold and Matthias, how do you look at the technology? Well, depends what technology are you talking about, Arnold. If you are talking about, for example, Google, Facebook, all this kind of technology, Tesla, all these companies will be hurt, of course, in a recession. Even they are really strong companies, probably they will face this much better than other companies, but this will affect to everyone. Okay. So Isaac is asking, so you are saying that gold is really good to trade in? We'll see the gold today, Isaac. So yeah, gold looks quite attractive at this moment. Yeah. So we will analyze. We will invest some money, some time there in the gold. Okay. Will the easing of lockdown in UK announced from today add to this? Will the easing of lockdown in UK announced from today add to this? So I don't know if they will really ease the lockdown. Yeah, of course, it will little by little reactivate the economy, but this is a problem. So, for example, retail environment will be so different even with the easing that won't be the same as before. And you can expect maybe a decrease in revenue for big companies, retail companies, around 40 to 50% prior last year. Okay, 50, 60, 40, yeah, is what could happen. So the economy won't be as the same. Yeah, we are changing totally the way that we are living at this moment. No, you're welcome, David. David said he agrees also. Happy you agree with this vision too. We will have a little more activity, of course, than before, because now we are totally locked and the economy stopped, and that is really painful for everyone. But everything will take time. Yeah, but yeah, the impact, we will still have impact. Anything will be as before. Okay, so we have this economic calendar. So what is happening at this moment with the unemployment rate and, for example, stock market and the unemployment rate during the Great Recession? This is quite interesting to see. We were mentioning before that the unemployment rate increased from 4.4 to 14.7 in only 1 month. Okay, everybody was expecting that, but really, is this really serious or not? So the best way is comparing this with the Great Recession, 1929 to 1930, 3. Okay, so we have, it's the graphic we have on the right side. We have the note here. So the unemployment rate grew from 0.04 in, we're talking about 1930, August 1930, or August 1929, to 15 in August 1931. So we're talking about 2 years. Took 2 years in during the Great Depression to reach the level that we already have. Okay, Isaac is saying that the network is fat. Really sorry about that. Let me check the internet access. So I have the connection. It looks like okay. Really sorry about this if you are having some issues in listening. Okay. Please, Isaac. Okay, yeah, you can see the recording tomorrow. Will be available during the morning, European morning. Yes, in our blog. So I will show this to Isaac. So website you have there. Okay, will be here. The blog announce, for example, here we have webinars. Yes. So you will have the webinar here placed. And to request the PowerPoint, please send me an email to info@thefinancialforecast.com. Okay, for everyone, really sorry about this that you cannot hear. Okay, it's breaking up. I hope the start is working okay. Yeah, you can catch all the information there. Yeah. Okay, let's go back. Okay, good. So unemployment rate, we see a quite strong negative correlation between the stock markets and the unemployment rate. Yeah, and we see all the time the stock market rise, the unemployment rate drops, and so on. And at this moment, we had first a big drop in the stock market. This is the Dow Jones, and the unemployment rate was steady around 3.5 and this 4.4, and now this month jumped to 14.7. Okay, so the negative correlation is still there. Yeah, and we'll continue developing this negative correlation. That means if we expect the unemployment rate continue growing, or we can expect the opposite for the stock markets. Okay, so we'll continue decreasing, and this will affect all the companies because it's really strong the correlation between the S&P, the Dow Jones, the Nasdaq. Okay, they move as the same practically. The same will happen with the European indices, with the Asian indices. Yeah, correlation is really strong, especially now that we are in a global economy. So unemployment rate increase, stock market decrease. And what happened in 1929 took 2 years to reach the level that we reach in 1 month. So this is telling us that the impact is really serious. Okay, we increase in 1 month what we did in one of the worst months in the American economy in 2 years. Okay, that's why we need to be very cautious with this. Very, very cautious. We don't know yet how harmful can be this COVID crisis. Okay, so we need to continue checking how all the economy is evolving, because this situation is really not good, especially now with this jump of the unemployment rate. Okay, very, very important. If you don't understand this, please stop me and I explain again. But we did in 1 month what that took 2 years in one of the worst moments in the American economy. Then we will compare again unemployment rate with the GDP and with the interest rate. What happened? Again, we have negative correlation between unemployment rate and the GDP, and we see that every time the unemployment increase, the GDP decrease. So Matt is asking, if the correlation with the unemployment and the S&P is so high, then why is S&P 500 going up big time since the announcement of the severe increase of unemployment? That's a good, very nice question, Matt. That's why I was talking about before about the mood. We have now like a positive mood of what is happening, but really the movement, the upward movement of the S&P is not really strong. It's not high. Yeah, it's not a strong movement. Yeah, it's moving up. It's recovering the big drop we already had, but we are not close of the levels 2 months ago. Okay, that's something we need to keep in mind. Yeah, we will see the chart just in a couple of minutes of the S&P. We will start with that instrument because it's quite interesting to see what's happening. Everything is pointing that the S&P now is correcting the big drop that already had. Yeah, but it's correcting only. But the mood is positive because we are moving out this lockdown. And we think that we had just a question before. If I thought that the economy will recover, will start just moving as before. No, the economy will be far from what was last year. So the recovery won't be the same. Companies will suffer, will be harmed, even with this easing in the lockdown. Yeah, that's important to know. What happened with the GDP? Every time unemployment grows, GDP drops. And these are facts. In the end, it's history. What happened? All the time, unemployment increase, GDP drops. Unemployment increase, and now the GDP is dropping again. Okay, and now at the moment we enter in a negative territory, then when we start just talking about a recession. Okay, recession is not happening at the moment you have a negative GDP. You need to have at least 3 months of negative GDP, 3 to 6 months, to start talking about a recession. And depending how long is the recession, we can talk about a depression. Okay, but at this moment we are entering in negative territory. Yeah, and that's something we need to that's why we need to keep a close eye in everything that's happening now. Yeah, we will continue the next month. We will do the same exercise. Okay, so this way we will be able to see the evolution of what is happening. So George is asking, so now it will take more time to the high unemployment rate to make an impact on the Dow Jones? No, probably what will happen is the unemployment rate will continue increasing and the Dow Jones will continue decreasing. Yeah, so probably we didn't reach the ceiling in the unemployment rate. During the crisis of the Great Depression, the maximum reach was 25%. At this moment, we're in 14. Okay, and we need to see really what will be the impact, even when we reduce the lockdown, we ease the lockdown. If we see really that the economy will allow to keep the same pace as last year. That's why retail market is so important, because retail gives a lot of job positions to many people. If retail business decrease and start being in a negative field, they need to make redundant a lot of people. Yeah, and that will be a big impact for the economy. Yeah, that's why we need to continue keeping this close eye to everything. What happened with the interest rate? Exactly the same. Every time that the unemployment rate increases, the economy slow down, and we need to reduce interest rate to reactivate and keep the economy moving. Okay, we need to make the money cheaper, give more credit in order to continue to allow the economy continue moving. And that's what's happening. We go down with the interest rate while the unemployment goes up. And all the time the same. Now the interest rate, they move down and the unemployment rate really grow. Yeah. If you see how we jump, it's not normal. That's why we need to be careful what is happening now. Then the next one, okay, if someone wants to buy a house, an apartment, or something like that, what happened with the mortgage interest rate and the unemployment rate? Again, another interesting negative correlation. So we have tops of the mortgage rate before the unemployment rate start moving up. We have that in the 2000, and then unemployment went up and the interest rate went down. Again, we have top when the unemployment rate reached the minimum, and then up, down, and the same now. We have a ceiling when was reaching the minimum, and now the employment rate moves up, and the interest rate continue moving lower. Okay, same behavior for all these indicators. That's why we can use unemployment rate as a key indicator to evaluate how everything is evolving. Not the only one, but really, yes, it's a really strong one. Okay, and then we have the yield curve, just to check the evolution. Every time that the yield curve, in this case we have 10 years against 3 months, becomes negative, when the curve is returned to normal, we have a recession. Yes, it's quite a strong indicator also. We have negative, we move up, and we enter in a recession. We have negative, we went up, we enter in a recession. And the same, we were negative, we move up, we enter in a recession, and now we were negative, we went up, and probably we will enter in a recession. Roshav is asking, sometime they can't be on the same level. Last slide. So what is the slide you're talking about? Rushad? Are you talking about this slide? Employment, unemployment. With this slide? Yes. No, you are seeing, you're comparing two different indicators, but in the same time, so you can see the correlation. Okay, in this case, you see every time that unemployment increase, the interest rate decrease. Okay, the unemployment increase, the interest rate decrease. Okay, that is a behavior that you can see in the past, can repeat in the future. Okay, all the time. You won't see the same level because you're talking about two different indicators with two different measures. Okay, but if you compare the time and you see the movements, when one goes up, the other goes down. Yeah, that's what we are trying to find here in the graphics. Yeah, to find the behavior. So we can explain, based on, in this case, the behavior of the unemployment rate, what will happen with the mortgage rate. Yeah. Okay. So, and then another important point to analyze is what's happening with the bond issuance. So to face everything that is happening now, we need to inject money in the economy. And one of the ways we do that is through bonds. Bonds are increasing, were increasing during the last quarter, during the last 3 months, at a level of 69% versus last year. Okay, so the US is issuing bonds 69% times more than last year. Okay, so we are trying to use debt to try to face and minimize the impact of this crisis. But the problem is that the debt is growing and growing and growing and growing. And if we are not able to keep this debt and the economy just slow down, we will enter in defaults. And we will start with the household defaults because won't be works, people will lose their jobs, economy will stop, we will start with the defaults, and not the big economy will stop. Okay, and that is something quite risky, and we can talk about a debt bubble that can burst. Okay, so we need to be careful with that. And we have here this graphic is quite nice, interesting, because we see all the pandemics that we had since 1915. Compared with the Dow Jones, the graphic is in log scale, and we see that most of the time the epidemics occur during the end of the bear markets and the beginning of the bullish markets. That is totally the opposite of that what is happening now. The COVID started at the end of bullish market. Yeah. So for sure, this crisis, this COVID was the trigger of something more big, but maybe we can explain a big part of the drop, and if this really becomes bigger, will be a big part cause of this debt bubble. Okay, because we are increasing the debt so much, and we grew the last 10 years based on debt, that this could be the real cause of really a big impact in the economy. Yeah, is this clear here? They are asking for the use cat. Habib, sorry. Okay, so let's move to instruments. We said we will start with the S&P. If you want some instrument like the use cat, just drop the message below so we can focus on that instrument. So we will move here to the S&P. As I said before, all the graphics that we will see here now are available in our website, and a big part of them are part of the free pack, the free forecast. So you can just subscribe and you have access to the members area. Okay, let's go to start with the monthly time frame. Okay, what happened now? We have really a big drop, and the drop happened too fast. Okay, think that the market, we were talking about the fractal. Everything is connected. So motor waves, that are the ones that are moving in the same direction of the trend, and corrective waves in the opposite direction. They are all the time connected. Not only in length, we know that the length is the most famous way to connect the different kind of waves, of segments. But not only that, we have time is a big part. It's really important to connect motive waves or motor wave with corrective waves, and the speed. So we have three key elements to analyze the market always, not only the length. Length is the first one, then we have the time, and then we have the speed. Okay, so based in this principle, what happened at this moment with the S&P, with the Dow Jones, with all the indices that are highly correlated, the drop was too fast. Okay, we see in these 2 months we have the big drop, and if we are correcting, okay, this movement started when this low is here 665. This drop was too fast. Okay, and we are saying that they need to be connected in time and also in speed. So what will happen if this sequence, really the one we are living now, we are experiencing now, this one is a corrective phase of the previous one, that is all this orange movement, and then went up, then ideally the iteration should finish in this area. Okay, this area is length, time, and speed. Ideally, the corrective sequence should finish in this area. Okay, the one I'm painting now. If we have a low at this point with a sequence of 3, 7, 13 waves, or pieces that build up that corrective wave, then we have a high probability of bounce up and just give us finish the corrective wave. Okay, so that's very important. So that means if this is a corrective, then the first movement went too fast, and we need to give now some time to the market to stabilize, and then continue moving to the downside. Yeah, this is long term, monthly. Very, very important that. So what could happen now? Before they were saying this is moving up, it's moving. Yeah, the S&P is reacting up, but we are still below this level, 3043. This is very important. If we break this level, then the chances to see new highs will increase drastically. Okay, at the moment we are below this level, we can see a consolidation, yeah, of the price to then enter in this area to align with the speed and continue moving down to create a new low within this area. Okay, and that way we will have a moderate with a corrective. What is the meaning of 3143? This is a key level. So the trend will continue bearish, will remain bearish. We still are in that corrective sequence if the price stays below this level. Okay, this is a statistical measure based on the behavior of the instrument. Yeah, that's why this is so important. Prices should stay below this level, will tend to stay below this level. Yeah, this is a monthly time frame, really long term. If we go to the weekly, so we had this strong movement to the downside, and now we are moving upward. What happened at the price action at this moment is within this ideal area length time speed, the blue rectangle between these orange lines. This increases the chance then for this current sequence to be the corrective of the prior one. Okay, movement to the downside, movement upward. So this is a corrective, this is the motor. So that increases the chances then to see another low. As we have many possibilities always in the fractal, in the construction, okay, we always show the two possibilities, and from where to where we can expect the price move in these areas that we call attractors. What is the one with highest probability? Go up or go down? Yeah, that is the biggest question always. For that, we have a tool that will help you to answer that question, and it's part of the forecast that you can access here in the free forecast. Okay, so we will move to the members area. Exactly, the market can keep going down. Now, based on the structures, yes, you have more chances if you have a maximum there to continue moving to the down. Now we will see what is the trend for that time frame. Yeah, something that we have in our dashboard. These are indices, S&P, weekly time frame. Okay, and here you have the trend. We analyze different 5 different aspects, yeah, components of this trend: the persistence, basic stats, correlation. And here, for example, someone were asking about the correlation. If you see now the correlation with the gold, let's go gold, okay, it's quite low positive, okay? That means that they won't move exactly as the same. They will have a big difference. So correlations close to 0, positive, are not strong. Yeah, so they don't move as same. Correlations close to 70, 80, 90, positive, are strong. Yeah, as we can see, for example, this is S&P with the DAX and the Dow Jones. Correlation is close to 1. It's really strong. Okay, so they will move practically as the same. So the overall trend is downward for this time frame. So it's probably that this trend will continue because we have a high persistence of 64%. So that means that the impact to the downside is stronger than to the upside, and we will continue developing movements to the downside. Okay, so we can create new lows. So in this graphic that we have here, in these two potential scenarios, what is the one with highest probability to happen, to occur at this moment? Is moving to the downside. Yeah. Okay, that was the question of Billy. Okay, we have only 5 minutes and we need to finish the webinar in 2 minutes. Okay, really sorry because we didn't have enough time. Please, you will have access to, you can get the PDF, so you can just study, see the graphics, maybe questions, everything. All you need will be you need to request to info@thefinancialforecast.com. Yeah, no problem at all. Just ask me and I will send you. Habib, sorry because I don't have time to explain you the use card. Send me a reminder, send me an email, and I will send you the graphic with the analysis, so you can see what will happen with the use card. Okay, I will use the last 2 minutes to show you what is Bumblebee. Bumblebee is our artificial intelligence. So it analyzes this fractal behavior of the market with all the principles that we mentioned before and invests when the chances of success are really, really high. So this is not a scalping system. Yeah, it's not a scalping strategy. It's an investment, a smart investment strategy that really analyzes the market as a fractal. And what will happen? So this is a real account from December to April that was working with the Bumblebee, our artificial intelligence, something that we call the B account. Yeah, why this? Because it's a concept of saving account or investment account, where you can have a much better growth than in other kind of investment product, especially now when the stock markets are dropping. What was the performance year to date of the B account powered by Bumblebee? 37.6%. Yeah, this is a real account. I have all the transactions. For those that want to know more, I can just send them forward the transactions. The expected profit is 90.2%. If we extrapolate the current profit, the biggest profit we had in March, so it was really a big statement and a big proof for the tool to see how what's working in really difficult markets. The profit position are 73%, loss 27, consecutive win 3, and losses 1. So really the brain of this artificial intelligence is really good. It's working very, very well. We are very happy. Our clients are very, very happy. We continue improving the tool, and we launched it at the end of April, the new version of Bumblebee. That is a 1.5.2. And we get really, really amazing results, especially with the pound dollar. It's working now with four experts. The pound dollar profit position 100% with a quality of 99.9%, so really, really good. Net profit 31%. The dollar yen 42%. This is in the length of 1 year. Really, really good. These are the two key instruments, and then we have the Kiwi dollar and the Euro dollar with 46% for the Kiwi. We are finalizing the test in this pair. Will be probably launched at mid-month or the beginning of next month, and the Euro dollar with 22%. Okay, really, really good. If you want to know more about this, just send me an email. I will send you more information. This is a live account. We just started with 1.5.2 version that will improve even the result that we had before with the 1.5 version as the one you saw in the graphic. Okay. Thank you for your time. Sorry to don't have enough time to go through all the instruments. Send me an email. I will answer all the questions. Info@thefinancialforecast.com. You will have the graphics access to the graphics in free forecast. The recording tomorrow in the blog. Thank you all and see you next month. Bye.